The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this Thursday, the 12th of January. Oh, we are well into 2023. This is exactly what we should be seeing most of the year, just zippy up and down. Hopefully, at least in this first part, the first quarter, maybe just the first month, we see higher lows and higher highs. But we're always looking in the Chapman Wave methodology. Actually, let me do this. I haven't done this for a little while. In the Chapman Wave methodology, we try to identify the lowest low bar. We always do that here for my subscribers to the opening call. We try to get the lowest low, and we try to institute a buy signal, because if you're able to get that low right there, it gives you all this cushion as higher peaks are made and they pull back sharply. If you can get in there, it gives you that comfort factor. When you get in here, you got the stop to worry about, and then you got to have a rally. So within that context, it's really important to at least attempt, at least in my case, as much as possible. It doesn't always work, but at least to try to get a bottom in something that's turning around, or a top. In the meantime, back at the ranch, what we look at is once you enter the trade or you're watching the position, the first peak this is called a leg A until it makes a peak. So it's a floating ladder until it stops dead and becomes peak A. Pulls back as long as it doesn't take out the starting point, 1 penny above that A starts leg B. Leg B continues with a floating ladder, B, 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 B. And as soon as it pulls back, makes a peak. And a peak, what is a peak? It means there's a lower right side high than the left side, and that's like a mountain. You reverse the course, and now you're going down. And that pullback, as long as it holds the low of the initial starting point, even if it takes out the low after A, it's not a problem. It's a problem in terms of trading because of stops and all that, but not in the Chapman Wave methodology. And then if it goes to a C, usually a penny above B confirms that you're in a buy signal to buy mode upgrade, and that says you should go to at least D, 4 higher peaks, peak A, peak B, peak C, peak D. At D, other things can happen. That's what I said to subscribers this morning. I said we've achieved our goal of peak D. In the daily charts, we've got it in the Dow, the S&P, and the QQQ, not the IWM. That's only in leg C. It's actually showing quite a bit more relative strength. I'm kind of impressed with and it's one of the reasons why my screamer list has single-digit stocks flashing every day, a whole bunch. It's unusual for that to happen with such consistency, unless the very small caps are starting to show some strength. And it is. So in the Chapman Wave methodology, you can go all the way to peak A, all the way to peak G. So A, B, C, D, E, F, G. There's no H. So if you go higher than G, then you've got an alternate count. And that says that you've got to go back and see if you've missed a restart or something like that. But there is no H. So what we look at here is at D, if within 3 bars there's a higher high, it starts an alternate count E/A, F/B, G/C. And very often we get to the G, pull back, make a D, and then that becomes at least a short-term top. Patterns I look at, straight lines up, straight line down, that's 1. Cup formation, that's 2. Arch formation, that's 3. Or a mix of 1, straight down, and then arching over, taking out the left side low, especially if it only goes to peak A or a B and then fails and takes out that left side low, then it can go much lower. And on the right side, it's the same thing. It's a reverse Y. And if you take out the left side high on the return to the high, that says watch out how it either takes it out sharply or suddenly stalls. All right, so those are the core things that we look at. And what are we looking at right now? We've gone, I didn't draw this in because we were worried about the rectangle formation, which can last a lot longer than your patience unless it decisively takes out the left side high. It certainly did that. A few days ago, we had added to our long position, both we have the diamonds, which is 1-to-1 long, and we have 3 times long. Today I had said, we took out a little bit of profit yesterday, and today I said in our trading position that we started a few days ago, I said, let's just take a tad off today, pre-open, while the market was much, much higher, and we'll still keep our core position, and that's where we are. So the Dow is now up 44 points at 34,018. Look, The MACD, the daily MACD has turned up. Stochastic's great at 86%. On-balance volume is lagging. It was lagging before, but the last 3 days has really increased the on-balance volume. That's the blue line. I love to use that. That's Joe Granville, Joe Granville's technique, which he had sometimes failed to use, but back in the 70s, he was really fabulous. As the 80s came along, he wasn't that good. His other techniques. Anyway, I use it on a price basis. In other words, this is a closing price basis. I used to have to add, way back when I started this whole technical trading thing, I used to add up totaling 1,563,92 plus, and then add it because it's a running total. If the price on the bar that you're following goes up, that running total, it gets added to. If it closes down, it gets subtracted. That's all it is. Very simple idea, wonderful technique. I use it a lot. Look at this high that was made on the 13th of December at 34,712. Look how you reverse right on there. There's no other technique that I know of that can't, it misses as well. But when it gives you a precise low or high, it's quite amazing. But you need to use other techniques as well. All the techniques that I use right now, except for on-balance volume, which means that the on-balance volume could, in fact, rally all the way to overbought from being oversold. That would be a positive. We're going to be watching that. And that weekly chart, I've drawn in the rectangle, the large rectangle formation. It says there's a good chance if we – oh, look at that. I forgot to mention it to subscribers today. If on a daily basis, the – Dow is able to close above 34,000. That's halfway into the Chapman wave Roman candle inverse wick right there. That would suggest that we're going to make a run for the high, the 34,712 high. And that should happen within a couple of bars, meaning a couple of weeks. All right, MACD is good. Stochastic in the weekly is at 77%. It's just okay. And on-balance volumes rallying. Monthly chart is what we're really watching for because finally there's a month only just 12 days in, only about, 7 or 8 trading days. We can't even talk about the month other than to say the 9-period moving average has finally crossed positive. There's that green L. That can change because you got up until the 31st. Is that on a weekday? Yep, 31st is on a Tuesday. So we've got quite a while to go to see what happens there. All right. I want to just get these done as quickly as possible because I've got a lot of stocks that people want to look at. S&P is trading at the high of the day, 39.76, up 7, almost the high. And we're looking at the 200-period moving average of 39.94 as being, I wouldn't say it's a target just yet. I need a little bit more. I need to at least touch the 39, I'll probably say 83 level. If it gets to 83, then that 94 target will be in place. And look at this, finally. The Dow weekly chart is so superior, but the S&P is struggling. It's right now at the pink inside track, first repellent zone. If it goes and crosses and holds above that green line, that'll be at 39. If it's this week, by tomorrow's close, 4,020. Oops, I think I did that too quickly. 4,029. Let's call it 40.30. If it closes at 40.30, that'll be a really big plus and say, hey, there's a good chance we're going to go to a leg D above the high that was made at 4,100.96. Remember, that was that double top almost to the penny. That right there at on the 13th, from the 1st to the 13th of December before we pull back. Hey, a lot going on. Oh, a lot coming down. Look at that snow. I'll be back in a moment. Basil Chapter, Dow's up 121. S&P is only up 6.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com. Educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hello, so we're back. So we're looking at, I just want to show you Amazon was mentioned again. Amazon's acting really well. Is it about to pull back? You know, this move in Amazon is so impressive to me. Having done, look, 81.30 was the low in March of 2020. It soars up to 188.65 in July of 2021. Look at the number of bars from the left side, March to the high of July, and look at the number of bars going to 81.43. It is 1 bar late in the Chapman wave bar symmetry from that midpoint. Look, from the left side right there, this is the 120-minute chart below. Let me get rid of that. Look, isn't this incredible? To that midpoint right there, plumb line I call it, the bar symmetry takes you, it went to 81.43. So 81.30, last month's low was 81 something else. What was it? 81.69. That was, that's 2 months. So that was exactly to the month, 81.69. It missed it by 39 cents. And went to 81.43, fractional lower low in as we started January on the 6th. And look at this move, it's at 96. I believe it was George in Boston. We were looking at that. And George, now we can start thinking in terms of, on a time basis, when you would like to add the next tranche. But in the meantime, you've got your tranche in the 84s. It held 81.43, the key support. I think 79 was what I said was something really important to monitor, but don't do anything until we talk together because it's a long-term position. I have to give you some room. And here it is at 96, fabulous. And 96, today's high of 97.19, takes you above the left side target that I had on an off chance at that time that there could be a rally to the 97.23 high of the 1st of December. What a pullback from 97s down to 81. I mean, this is a major company. So this is really important, and it's happening one by one. I'm starting to see this occur in really important stocks, especially in the deep cyclicals. And I've spoken about this. I'll get back to the market in a moment. The SLX, the steel sector. Look at this move. It's gone above the left side high of 63.67. This is generic. This is the sector ETF, Vector Steel ETF. We have a steel stock. And look at this. Light leg C in the weekly chart. The technicals are starting to improve a lot. The monthly chart says, what bear market? This is incredible. From the high in the 70 area down to the low in the around about 46. It's now at 64. You reverse the numbers from 46 to 64. This is a leg B in the, there's your A. So it's a gray A and a gray B. Even though that was a peak C top, I still have to notate that's your objective. Here's your starting point. Every peak needs to be articulated. And here we are in gray B. If this B stalls and then we go to another C and that C stalls below that previous high, you'll get an overlapping wave that can take you above it to a leg D. I don't like to go out that far, so I want to go just in the nearer term. And the nearer term says the left side high in the 65 area, maybe 70.43 was the high of April of last year. That's the thing that I'm looking at. And we're at 64. That's 6 points to go, 7 points to break to a new high to get to that leg D. I go one step at a time. And I'm saying this is a Chapman wave squash that you can see right here in the stochastic and the MACD. That takes you very quickly to the C. Then it should stall just a little bit before you get to a D. And then if the stochastic holds, it's at 95%. That's going to be very good. So this is a sector. It's not just a stock. And it went to the 200-period moving average exactly and then bounced, got a beautiful cup formation here. Well, a little jagged, but it is a cup formation nevertheless right there. I'm taking that B. B is where I'm going to call that as a as the midpoint that I'm taking right there. All right, we've got a caller. I'm going to go straight to our caller. And our first caller is, got to scroll down, Brent in Martinez. Hi, Brent. How are you?
I'm doing fantastic, Basil. How are you?
I'm very well, thank you. Now, I've been thinking of you a lot. I wondered what you ever did with you. I know that's not what you're calling about, but I'm putting a little pressure on you because you always do so well in picking bottoms. What did you do with the UNG? Did you do anything?
I did. I bought it yesterday.
Oh, and
but
today
it's up. I bought into the boil, which is, I think it's the two times. And I even did with that, I bought options on it, calls.
Okay. I knew I had to speak to you about that. I was watching it closely, and I thought, I bet that you've got the patience to wait because it was not acting, natural gas was not acting well. It just couldn't hold any rallies. It just kept making lower lows. This is the first time that I've got the technical suggesting that maybe right here we could get a reversal to the upside that at least holds. We want you to hold for at least 3 to 4 bars without taking the left side low. Anyway, that's not what you called about. First of all, congratulations. You called about what?
Oh, you've talked about the 2-click day. I did one of my quick trades this morning on when we had that dip in the market where it went red, and I ended up buying into the TQQQ. I bought calls on that.
Fabulous.
And so let's see. What did I buy here? They were I got to look at the strike now. They were the 19s. So I bought those at 37 cents a piece, and I sold them. I guess I bought them at, so $9.57 your time.
Yep.
And I sold them at $10.15 for 74 cents.
Oh, you doubled. That is fabulous. Let me just show you something here. So we're talking about the TQQ, folks. This is what we've done for subscribers every once in a while. We buy. I actually wanted to buy the TQQ as well. It was a little too complicated, so I did some other things a little bit more cautiously, but we did take profits a little tad off from our 3 times long down position. But look at this. The TQQ, I'll show folks, this is trading right at 9.55. It makes a low with it. I call this a Chapman wave silent doji candle just before that. It's either just before or just after. So if you did a scan, you wouldn't see it because it didn't make the low. It was just before the low. And the low was at TQQ was at 1859 at 9:56 Eastern time this morning. And it went to peak A, peak B, peak C, peak D, peak E, and peak F, and it's just stalled, but the 9 is still way above the 14, and it's acting really well. But did you get out of all of it, or you still got that?
I just sold all of it, Basil. With that quick of a gain, that's my discipline. I thought about keeping a half because I could be in the trade for free, but I just at that point
there's
I was
nothing
happy
wrong with that.
It was made that quickly.
Absolutely. Not only that, I respect the market because the market giveth and the market taketh. And you've got there are times where you say, I'm just a little uncomfortable. I might give up something, but I know what I've got in my hand. And that's really important. And then afterwards, it's wonderful. Kick yourself and just say, oh, my God, I could hold it. It's better to be saying that than to say, oh, I just saw a fantastic gain, shrink. And that's just, now look at this, left side, right side, price time action. Can you hold on a second? I wanted to show something. I don't know if you can see my charts in the Tiger YouTube, but I'm showing the absolute perfect cup formation with the plumb line and the number of bars to the left equal exactly the number of bars back to the high on the right. I'll be back. Dow's up 153. S&P's up 7. We're on with Brent, and we'll talk about the VIX, about the TQQ.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Others, we're back, and we're looking at the TQQ in a 1-minute chart. The TQQ is 3 times long, left side, right side, 3 times long. The Qs themselves, that's like Index 100 trading vehicle. And if you look at the left side high, and we have Brent online, and Brent saw this pullback from 932 in the QQQs and probably in the futures themselves, but they pulled back sharply from 1965 was the high at 932, comes back down and stops there right there at 956 at 1859, and then starts to rally. And you can see that the MACD turned up. The stochastic gave a nice turnaround 1 bar later. The on-balance volume here was a little wishy-washy. It gave actually a high right there. Then it gave a low on the next bar. And what happened was it went to peak A, peak B, peak C. Remember the Chapman wave? We expect D. D is where other things can happen. And if it very quickly goes to E, you can get an alternate count, but that's also where it can turn down. And Brent, you got out perfectly because now it's at 932. And I bet if you look at the options, the premium, which was expanding as you were getting out, is probably now back a lot from where you got out.
Exactly, Basil. I'm really enjoying that you brought that to us. It's been very useful, and I see it so often that it's pretty amazing. I just really appreciate you doing that.
Yeah, I tell you what's very interesting is in our minds, for many of us, we always think, oh, the down moves, you always get, it's like a crash formation to the downside. Actually, it's very interesting. The market has this, most of the time, there's an equilibrium between buyers and sellers, and then it's just a slight bias to the upside or a slight bias to the downside. And that's what you can see. And if you're talking crash, it was actually the inverse of a crash with those big green candles suddenly at 1010 starting to move higher, and then they stalled. And yet the number of bars is exactly the same on the right side to the left side. And now we're coming back, and now you've got to watch the left side in the QQQ, the 1009 time frame low of 18.88. That's going to be the issue. If the low that was just made in the bar that we saw a moment ago of 1921 gets taken out, then you would look at that as a potential left side, right side price time match. But it's only in the bar, I'm talking to you right now, that the green 9 EMA went under the 14-period moving average. So it's just fascinating how you look at the MACD, look at the 9 differential, the green line, the histogram was rallying all the way from when it crossed positive, and it did turn down right there at 1025. So the indicator that held you in the price, held you longer, was the 9 over the 14, yet the 9 differential in the MACD was turning down. The stochastic was already sharply lower. It was like at 23% or something like that. So it's interesting that how, if you put together the puzzle, it looks like a lot of information, but there's nothing that you have to actually type in other than, you don't even have to use the letters. You can just use number and say the number of bars on the left, they count the number of bars on the right, and that gives you information. So I just thought, I thought I'd show you that. I didn't expect it, but isn't that interesting? And now you've started to see you see the pink moving average, the 9-period moving average, almost ready to cross back over the 14-period moving average, which is saying, like yesterday, all the dips are being bought. We'll see if that's the case today. It's one of the reasons why I didn't want my subscribers to get out of our long positions at all, because there seems to be buying here, but I do expect some kind of consolidation. Hey, I congratulate you on your entry point, and I also congratulate you on the UNG, which is also holding very, very nicely at 12.26, up 54 cents. Thanks so much for the call, and always appreciate it.
I always appreciate everything you do, Basil, and thanks so much for your help, and just have a wonderful day.
You too. Thank you very much. So, folks, now that we've patted ourselves on the back, let's see what's happening here to the E-mini. That went to a peak A, peak B, and a peak, let me do this, a peak B. There's your peak C and a fractional quarter point higher. I think that's a quarter point. And let me just see, I haven't had a chance to do this. I would have done it. I did it earlier. What I did is I did grab a short position briefly on that 905 high that was made. Was that 905? No, we had made that's right, on the big spike up, didn't do anything. They waited, and then finally we got a doji candle right there at 905. So it turned down, then it turned pink. The 9 went under the 14-period moving average. And then I said, I can't do it, a left side, right side price time match to that high. I have to extend it out. So I have a methodology that I use that I always explain when I have my all-day sessions. And I drew in this dashed line, Chapman wave inside wedge, target support line, meaning we're going down, and I put in a big X because I thought that's the best way to do things. It helps. I've been doing it myself. It does help me, and it says right here at 9:53 Eastern time, there should be in that area. It doesn't have to be exactly to the minute, but it turned out it was within 2 minutes. The low that was made of 954.00, round number low, at 8:31 after that disappointment initially on the CPI number. It actually came in 2 bars later to hit that number exactly right there. Went to a trough F, and then we ran up. Now what I would normally have done, I was doing the show, obviously. Sometimes I'll do it on the show. Maybe tomorrow we'll have a live show where I show positions right here. So that's the move that I would be looking at. I wouldn't have known it, but over here I would have said, okay, to that bar, does it look? I've got to turn around. Can I get a left side, right side? I would have first done it there, and then I would have done it to the high that was made right there, and I would have got left side, right side to the almost doji type candle right there. And then I would have said, all right, you don't have to have all the colors. Everybody's got trend lines. Just have a trend line. You can make the one. You don't even have to change color. You know that you put it in. And this will be green. Let's just see how that works. We just did that with a TQQ. And let's just move this to the right and see where it came out to. Nothing here can I make up. There's nothing here that is not on the chart itself. I'm not making up anything. Putting in the plumb line, I'm putting in, this would have been too steep, so I would have taken this left side, and I can't do it now because it'll take me to the price. Let's just see where that goes, and let's just see, there it is. So it went, it just missed it by about 50 cents or 25 cents, and there was the high right there, the peak D at 10.20. So where did this line go? I will always take it to the end of this right side extension. It takes you to there. And there's your resistance line. It broke out above it, then that became support, and there it is. Anyway, nice technique, huh? All right, let's get back to our story. No, some people are interested, and some people say, hey, 1 minute charts. I'm looking at the year, 2023. What do you want to do? Well, we have started positions. I have no idea whether this is for the year, for the day, for the week, but it's in sectors that I think are going to be able to garner some buying as it's recognized that every news report is starting to make higher lows and higher highs. And if that can continue, it raises the key base of support. To me, that's important. So let's go back to, I want to do this. I never finished. So I want to show you a relationship with IWM. That's the Russell 2000. There it is. There's the 200-period moving average. It's acting really well. I like this because, I think I did change this, and then I got knocked off and I couldn't save. I had to redo a bunch of charts. Happens. So you see this Chapman wave inside track repellent zone. I'm going to raise it to that level because it makes sense. It's already starting to show that it's showing. So I want it to be pushed to the extreme so that eventually when it breaks out, it decisively breaks out. So we're at the resistance line right now. I like the IWM. I think it's actually I actually think it's a little bit better than the Qs. I'll be back. Basil Chapman, Tiger Ignitions Hour.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So let me just do this before, because I like to answer the questions as I see them. So Exxon, let's see, Basil, Exxon, XOM, as it approaches its high of 114.66, what clues do we look for that will show it will continue and break through? So you remember we spoke about this, that Exxon was in a position where I thought there'd be a time-lapse consolidation. And it retested that 114 a number of times, and then it broke down and went all the way to 102. And then it started to make higher highs and higher lows. Now I can say to you, the weekly chart is suggesting there's a cup formation and that it should retest and probably break the 114 level, because that's where to give you finally the leg D that was missing in the monthly chart. It also means that absolutely 109 to 107 is really important support, and I don't think that that's going to be broken in this particular move, because it looks to me like energy is finding a place. So that was Exxon. Yes, very good, and I know that you stuck with it, even though I was saying for a long time, look for a consolidation, not a sell or a short, just a consolidation. We certainly got that. 12 points is a 10% correction, and now it's starting to head back up. And look how the weekly chart, the 9 didn't even get close to the 14. This is tremendous strength. Even though the MACD was weak, stochastic's under, it's at 82%, it was under, now it's up. And the on-balance volume suggesting we are starting to get a little overbought in the weekly, but I would go with the daily, which is still looking good. So this is a strong move up $1.70 at 113.07. Congratulations for sticking with it. Hell was mentioned. Halliburton, look at this. Oh, I thought I spoke about it yesterday. Oh, I didn't put it in. I'll just put it in. Here's your low bar. I did draw the cup formation with the resistance, Chapman wave inside track repellent zone. It's also a falling axe formation. I don't know if you're going to get your one-to-one to the upside, but have a look at this. Peak A, peak B, peak C. How many leg Ds do we have here? This is your leg D, and it's breaking out. And what is it doing? It's heading towards the left side high, G/C in the monthly chart. But the daily chart made a peak F at 42.10. Nope, wasn't it 44? Yeah, 43.99. Missed it by a penny. That was in the week of the 10th of June. Plunges down to this was a big pullback. Pulls back to the 23.30 level. Week of the 30th of September. And now it's got a left side, right side price. Time match is actually a little bit late, I think. Let's just check it out. That would be there. Oh, no, that's good. Okay, is that your plumb line? Right, there's your plumb line. And what are we looking at? We're looking at green on the right side. Remember, I have in TradeStation, I have all these different, they've always had fantastic tools, and that's what I gravitate to since I was a visual designer once upon a time after high school. So I just gravitate to design. That's what I do. I'm not the mathematician. I am the designer. So we're looking at chance that it's going to go to, this is peak A, and it's only a peak B, a leg B. in the weekly chart. So Halliburton is starting to break out. Congratulations to our Denner who was talking about it. Yes, a really nice move up, $1.38 at 42.36. Next question came in. UNH has earnings tomorrow. So this is a problem. So this is the prime element of looking at healthcare is to look at United Health Group, managed healthcare. It was a fantastic leader right up until the double top that was made back in October into, say, November. And it's been pulling back from the double top in the 550s. And what we're looking at here is that the weekly chart is just, last week went pink, and this week it's even lower. It's gone below the left side low. I don't care what the earnings are. I suggest even if there's a pop, the United Health is in the sector, and that's the reason why we're looking at this rotation that's going to some areas, hopefully the ones that we're identifying correctly for my subscribers to the opening call, because it's important that the best sector starts to rest when the other sectors are ready to move, the ones that were the weakest. And that's what I don't care what the earnings are. My impression is that it is stuck between the 511, the 200-period moving average. It's at 490 right now, but there's a good chance that it tests the 470s before the rest period is due. But it might even have to retest the low. United Health, just a fantastic win. Long term, please don't touch it. Just shorter term, it's in a rest formation, and that says it could pull back a little. 449, let's go to 450, was the left side low of June. There's a chance that it has to test that, maybe even take it out. The best thing for United Health is it gets back into the rectangle and it starts to trade above 512, and it does that towards the end of January, the beginning of February. But if it breaks under 480 in the very near term, that's a problem. Next question came in here was FCG. FCG. Now, wait a minute. FCG. FCG is the, First Trust Natural Gas ETF. You know that I've never looked at, I might have, but it's not ringing a bell for me. And that bell might be a little bit cagey there. So, yeah, nice rally, a nice V. Oh, this is already turning up. So the fund itself, peak A, peak B, peak C, D, peak E in the monthly has a sideways rectangle formation starting to make higher highs and higher lows. Oh, this is really good. I'm sure that Brent will like to hear this. This is a move that says that low, the left side test. Remember we spoke about this. This is price symmetry again. This is the one I've been talking about for months, not just weeks, but months. Actually, I've been talking about it since I'm at TFNN because it's a pattern that I've been notating and working on for years. See this move over here, natural gas, went from December, the week of the 27th at 11.69. This is UNG. This is the trading vehicle, U.S. Natural Gas Fund. And look at that exact move. It's one bar late. Actually, I can't say it's late because it did go to the 11s last month. It went to 1162. So it went below. So it did it exact to the month. Is that not amazing? This is talking about December to December, a year's worth of trading going from the 11 area up to the 34s and then back again. What a technique. When I found this out years ago, I thought, how does the market know to do that? I mean, what is it that has the intense buying pressure and then the intense selling pressure, and yet it's just a very orderly move to the upside in time, right? All right, enough with that. So the Feds printed $4 billion a day in 2022, totaling $10,000 per household. You wonder why we have inflation? No, we have inflation. My contention is that there are certain areas that are working towards some deflationary area, but putting deflation back in the box like at the supermarket, it's like the gas pump. Gas goes up 3 cents. Boy, those signs, whoosh, they go up. Gas goes down 10 cents, 20 cents. Ho-hum, da-da-da-da. Yeah, nothing to see. It's like, this swaying in the breeze. Oh, talk about that. Yesterday, we were talking about Dean Martin. So I thought about, there's one of the songs that the actual performance and the orchestration on this particular piece, Sway With Me, with Dean Martin, is just fantastic. When marimba's rhythms start to play, dance with me, make me sway, like a lazy ocean hugs the shore, hold me close, sway on, like a flower that is in the breeze. All right, we're up $69. We'll be right back.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Real quickly, I'll do a little bit more of it tomorrow, but VICR, I looked at this the other day, Vico 4, and I can't remember, I actually notated what it does and I lost that information. But I like the chart just as a rebound. I couldn't remember what it did, but more importantly, just remember, just like I'm getting the message here about I wonder why there's inflation. Yeah, but I'm looking at the chart. Inflation's there, and we've been speaking about it for absolutely ever. But you have to look at the charts to tell you what information can you use right now that helps you. So this has made this W formation or a big U-shaped formation going right at 58.69 up $1.04. It's right at resistance and it's in peak A, peak B, peak C. It should go to a D. I think the whole area just under 60 should be resistance. I like it if you're holding it. I just hold it. Maybe we'll look at it again tomorrow or Tuesday when we're back from the long holiday. Next question was, yes, so VCG, I would suggest if you get a little bit of a pullback, you can add to it because if you're already in that position. But then, or you want to add to it now, add a split position of whatever you were going to add. part of that, and then wait for a pullback to add a little bit more. Next question came in, could I look at GSM? This is also one that showed up as a screamer recently. In single digits, it's at 474, up 14 cents. Single leg A from the, need to check that out. No, it's a B. 364 was the low on the 16th of December, and 366. Yeah, this is a leg B. There's your A, here's your B. But it does have resistance. The left side target would be the price that was made on the 23rd of November of 496. So the 490s, I think, is going to give you a little bit of resistance, but there could be a little bit of a pullback. But all the technicals in the daily are very strong. The weekly is stalling at the weekly chart. There, the technicals are not good, and they're stalling at the 14-period moving average at where we are right now, 474. Folks, I'm going to hand you over to Steve Rhodes. Great programming coming up all day. Check out both before my daily newsletter. And see you tomorrow. Have a wonderful rest of the day. Thank you for being here.